So you've got your down payment all saved up and you get ready to go to closing and you find out you need another how much? Today we're going to talk about closing costs for buyers. One of the things that confuses buyers, at least in our experience, that we feel like we have a conversation early in the buying process with our clients, and then as it gets closer to the closing date, they don't realize that we have this amount of money due. So today, let's have a really quick chat about what you need to prepare for closing costs. The average rule of thumb in purchasing a home or anything really, an investment property, is you need to have 2 to 5% of the value of the loan in order to close on your property. There are 3 types of fees that you're going to be dealing with. One are your lender fees, one are your third-party fees, and the final is what we call prepaids. So the first one we're going to talk about is your lender fees. When you have finalized your application for your loan, now this is not your pre-qualification. This is when the lender has been burying you with requests for, 72 years of tax returns and your W-2s since your first job as a grocery bagger. It's not that bad, but it feels that bad when you have just given all the information and they finally say to you, your application is complete. Within 3 days of you completing your application, you're going to get what's called a loan estimate, and it would be called an LE. And I've got a little sample of one here for you to look at, and it should come up on your screen. And this is what's called a loan estimate. On the second page of your loan estimate, this is a standardized document. Your lender may have his branding on it, but this was required since 2015 that every borrower gets a copy of this document. And page 2 breaks it down for you. So it's broken down into your loan costs, your services that you cannot shop for. In other words, you have to pay your chosen lender their fees for these. And then another section of some services you can shop for. Your loan costs are your origination fees, and sometimes you'll find out that lenders don't charge you origination fees. Usually what's happened is they're kind of rolling it into the cost of your loan. So just read those documents, although they do have to make money for lending you the loan. There's no reason for them not to make any money. But if they're telling you there's no origination fee, it's usually because it's just not a line item. It's been rolled into the cost of the percentage. There would be any points here. If you've been given a chance to buy down your loan, the lenders call them a point because it's a point on the percentage. So I don't know what the numbers are, but say they'll give you a 0.25% off for every additional 1,000 that you put down. Those are your loan costs. Your services that you cannot shop for, these are the costs to the lender to get all the information they need. This is an example. Your lender may have something different. It would be your appraisal fee, your credit report fee. It could be a flood determination fee. It could be a flood monitoring fee because FEMA is constantly updating their maps. The lender's going to charge you to stay on top of these maps and make sure that your house, maybe you're close to a flood zone and something changes and they want to make sure that they don't need to update your insurance. It's your tax monitoring fee to make sure that they're paying your property taxes on time. And it's your tax status research fee. Your lender and your closing it, depending on where you are, I think in Rhode Island, the closing attorney does this. They'll get what's called a municipal lien certificate on your home to make sure that the taxes are up to date. The final one is the services that you can shop for. And these are the ones that you can look for the best deal. It's your pest inspection fee. If you have a VA loan, you have to have a pest inspection. It's a survey fee. Some states do sell by survey. In Rhode Island, we do not sell by survey, so you won't see that. However, if you're in a neighborhood, say the 5th Ward in Newport, that's an older neighborhood where those houses went up sort of higgledy-piggledy and, your neighbor's driveway is behind your house, you might want a survey, and you would pay for having that done. Your title insurance binder is usually your closing attorney. Again, in Rhode Island, we use closing attorneys. They are usually attached to a title insurance company. Chicago Fire is a really big one around here that a lot of companies use. They'll have a cost to you. Your settlement agent fee, that's your attorney's fee. You could shop around and see which attorney gives you the best fee, the best cost, the best price. And then your title search, and your attorney or your closing company is usually paying someone who specializes in title search, who creates an abstract to make sure that that property is actually owned by the person selling it. So those are your third party, a sample of those lender costs that are going to be on your loan estimate. The third-party fees are the fixed costs that we just talked about, which are the appraisal, the credit report, the flood determination, so on and so forth. Your prepaids, which are listed on your loan estimate, are your, if you close on June 1st, your first mortgage payment is due July 1st, but you still have to pay your interest for that first month. So you'll pay that at closing. That's a prepaid. If you have chosen to have your loan include your property tax, what happens is you pay a year's worth of property tax in advance. That'll be a closing cost. Your homeowner's insurance will ask you to pay a year in advance. You will put that into an escrow account, and then the homeowner's insurance company doesn't ask you to do it, but your lender does. Your lender will say, give us a year's worth of your homeowner's insurance to put into escrow, and then they'll pay the amount for you. So that's a good estimate of what you need for closing costs. The problem is you don't get that loan estimate until you complete the application for your loan, and generally you don't complete that full application until after you've gone under contract. So bear in mind, you need, in addition to your down payment, you need 2 to 5% of the value of the loan. Another tip from Warner Realty Group, this is Warner Realty Group, making the complex simple.